do think that's exactly how it will go. I mean, gold has been creeping higher. It's averaged 9.9% per year since 2000. It's outpaced everything. And then it will go way higher when the realization that this is the system that we are moving towards becomes acute. People in the West have no idea what's coming. They can't get out of the way of what they don't see coming because our media doesn't do a crappy job. They do no job of telling us what's really happening. I call it logarithmic decay. Little by little by little by little, then all at once. And that's what it is. And you can see the little by little are the central banks. They know the playbook. So quietly, let's use the Western suppression to de-dollarize and wickedly accumulate gold and bring it home without really distorting the price. And then when it becomes obvious to the rest of the world that this is what's happening, the big money, as usually happens, is already sitting comfortably in their position, and then they'll let it run. So yeah, I do think that's what will happen. And it's interesting, gold is held in all central bank balance sheets across the globe, Logan, in an account called the gold revaluation account. You can't make it up. Over my shoulder there, that's what Roosevelt did in 1933 when he confiscated gold, devalued the dollar by 40%, in essence, revaluing gold by 40%. The head of the Dutch National Bank has been very adamant about this. He says, we hold gold, even though our balance sheet is upside down right now, I'm not concerned because we have 20 billion euro in the gold revaluation account. On central bank balance sheets, you're not allowed at this point to offset liabilities with your gold. So gold is in your asset side of the balance sheet, and they have to balance out. The same amount in the gold revaluation account is on the liability side. So, and it's valued at $35 an ounce in all of those central banks. That's the Bretton Woods number. And if you think about it, how high could gold go, being that it will be backing a new system? Even look at the way the West talks about it, right? Kristalina Georgieva, the head of the IMF, said any CBDC not pegged to something is fiat. But before that, the IMF, her institution, issued a report. You can Google, it'll pop right up. Gold as an international reserve currency, a barbarous relic no more, ? It is the only other tier one asset. I think they all know that a CBDC has to be pegged to something, that a system that has lost so much trust through inflation, through weaponization, will need to be trustless. There will have to be something that inspires trust. That is the marriage of blockchain technology, a la the Project M bridge and the unit and a commodity like gold. And that's exactly what will happen. I really do believe that. And they could revalue it just like that. Heck, in China right now, silver is $4 an ounce higher. Why? That's the real price of silver right now, because that's what someone will pay for it. So they're inspiring and incentivizing the traders in the West who have access to the COMEX, the LBMA, and the Shanghai exchange to buy in the West and deliver in the East. What if they made it $9, $12, $50 higher, $100 higher? What is the real price? What if they say gold is $10,000 an ounce? This is what we'll pay for it. This is the market price. That is the market price, not the BS that the Western markets have created, this illusionary price through the ability to trade years worth of mining production in one day. Way more than they have bars backing the contracts. That's what the Hunt brothers noticed in 1980. They said there's way more contracts than there are bars, so let's buy all the contracts and stand for delivery. And they did, and they drove the price up. And then the exchange changed the rules on them and said, well, you can be long only a certain amount, but you can be short as much as you want.
Gold's steady ascent in value over the last few decades is nothing short of remarkable. Since 2000, it has averaged a 99.9% annual growth rate, surpassing virtually all other investments. This isn't just a random upward trend. It's a clear signal that the financial system we are accustomed to is evolving into something fundamentally different. As the realization of this impending shift dawns on the broader population, the demand for gold will likely surge even higher. But here's the kicker. Most people in the West are oblivious to what's coming. Our media doesn't just do a poor job of informing us about these developments. They do no job at all. The changes are happening gradually, almost imperceptibly, like a frog in slowly boiling water. And then, as history has shown us time and again, the change will hit all at once. What I like to call logarithmic decay. The central banks know this playbook all too well. They're not just sitting idly by, they are actively using the West's suppression of gold prices to their advantage. They are quietly accumulating gold, steadily de-dollarizing their reserves, and repatriating their gold holdings without causing too much disruption in the markets. It's a calculated move. Once it becomes evident to the rest of the world that this is the direction we're heading, the big money, the smart money, will already be comfortably positioned. Then they'll let the market run. Gold's role in central bank balance sheets cannot be overstated. Across the globe, gold is held in what's known as the gold revaluation account. This isn't just a footnote in financial statements. It's a significant asset that mirrors the value of gold held by the central banks. What's intriguing is that the value of this gold is still officially pegged at $35 an ounce, a relic of the Bretton Woods era. Imagine the potential revaluation if the real market value of gold were to be recognized. This disconnect between the official price of gold and its actual market value is one of the most glaring financial anomalies in today's world. The $35 per ounce valuation harks back to a time when the US dollar was directly tied to gold, a time when global financial stability was assured by the promise that each dollar could be exchanged for a fixed amount of gold. However, in 1971, that promise was broken when President Nixon ended the gold standard, untethering the dollar from gold and allowing for the unrestrained printing of money. Since then, the dollar has been backed by nothing but the full faith and credit of the US government, a faith that is increasingly being questioned by those in the know. Take a closer look at the global landscape, and you'll see that while the West remains complacent, the East is making strategic moves that could reshape the future of global finance. In China, for instance, the price of silver is already trading $4 higher per ounce than in the West. This isn't an anomaly. It's a glimpse into the real value of precious metals. If China decided to set a higher price for gold, say $10,000 an ounce, what then? That would become the market price, not the artificially suppressed prices we see today in the Western markets. This isn't just speculation. The Western markets, especially the COMEX, have created an illusionary price for gold and silver through the ability to trade years' worth of mining production in a single day. This disconnect between paper contracts and physical gold is what the Hunt brothers noticed in 1980. They realized that there were far more contracts than there were bars of silver, so they bought up the contracts and stood for delivery, driving the price up until the exchange changed the rules on them. The market manipulation that took place then is still happening today, but on a much larger and more sophisticated scale. However, this time, the implications could be far more severe. The accumulation of gold by central banks, particularly in Asia, is not just a strategy to hedge against economic uncertainty. It's a calculated effort to shift the balance of global financial power. As these nations continue to repatriate their gold and increase their reserves, they are effectively preparing for a future where gold plays a central role in the global monetary system, a system that could very well exclude the US dollar as the world's primary reserve currency.
Kind of feel, Logan, that the gold and silver markets are playing by a new set of rules. Kind of like the long-standing trend of price of gold and silver being determined by not only the Western institutional investors, but the Western banks, the commercial banks, the central banks, is breaking down. I think the flow of gold from west to east is a real transfer of wealth, and I find it really crazy, if not worse, how much the West is underestimating the significance of this. We are seeing a massive accumulation by the world's central banks, using the suppression of the Western paper markets to run cover, indeed, for their accumulation, which has reached levels that the world has never seen in over 100 years in all central bank history, who are not just the wealthiest traders on the planet, but also the most well-informed traders on the planet. And I believe in particular when we talk about gold, that gold is replacing the US Treasury. If we go back 25 years to 2000, we see that gold has doubled the performance of the 10-year Treasury. If we go back 50 years, we see gold has just surpassed the performance of the 10-year Treasury for 50 years. It's doubled over 10 years, but just scraped by its performance over the last 50. It has outpaced since 2000 every investment with the exception of Bitcoin, which started from zero. But if we look at even the S&P 500 over the last 24 years with dividends reinvested, it's averaged about 9.5% to gold's 9.9% compounding. It was reclassified by the Bank of International Settlements as the world's only other tier one reserve asset, next to US Treasuries and US dollars. And when we see the world's biggest money, who is the most well-informed and influential group of traders on the planet, not only massively accumulating gold, but something even more interesting is the repatriation of gold. Over the past year and a half, 2 years, and many of which have done so over the last several months, we have seen a massive repatriation agenda where these countries are bringing their gold back home. Look at the Bank of India as an example. India, who is either the number one or two largest accumulator of gold on the planet, well, they bought more gold in the first 4 months of this year than they did in all of last year, and they brought it all home. They repatriated it, along with 100 metric tons that they've held at the Bank of England since 1991. The Bank of England and the New York Fed have been really the home for most of the world's gold over the last 50 years plus, because you had Western rule of law in a stable jurisdiction that gave direct access to the LBMA, a la Bank of England, and to the COMEX, a la the New York Federal Reserve. So they would keep their metal in these institutions with immediate access to the large trading hubs. Interestingly enough, over the past 100 days, the cumulative volume in the Shanghai Gold and Futures Exchange has increased by 200% and outpacing the COMEX. It is now the second most influential platform. I guess it has the most volume, second most volume on the planet, next to the LBMA, surpassing the COMEX. This flow from west to east is real, as is the repatriation.
What we're witnessing now is a real transfer of wealth from the west to the east. Central banks around the world, particularly in Asia, are accumulating gold at levels not seen in over a century. They're using the suppression of the Western paper markets as cover for their massive gold-buying spree. This is not just a reaction to short-term market trends, but a long-term strategy to secure financial dominance in a rapidly changing world. Now, this isn't just about hoarding gold, it's about replacing the US Treasury as the global reserve asset. Over the last 25 years, gold has outperformed the 10-year US Treasury, doubling its performance. Even over the last 50 years, gold has managed to surpass the performance of the 10-year Treasury, albeit just barely. Since 2000, gold has outpaced every major investment, including the S&P 500, which with dividends reinvested has averaged about 95% compared to gold's 99.9% compounding growth. This shift in value is not going unnoticed. The Bank of International Settlements, BIS, has reclassified gold as the world's only other Tier 1 reserve asset, placing it alongside US Treasuries and the US dollar. This is a significant move, signaling that gold is once again becoming the bedrock of global finance. But perhaps even more telling is the repatriation of gold by central banks. Over the past few years, we've seen a massive movement of gold back to its home countries. Take India, for example. India, one of the largest accumulators of gold, bought more gold in the first 4 months of this year than in all of last year, and they brought it all home, repatriating it along with 100 metric tons that had been stored at the Bank of England since 1991. This trend isn't isolated to India. Many countries are bringing their gold back from Western storage facilities, which have been the main repositories for global gold reserves for decades. The New York Federal Reserve and the Bank of England have long been the go-to places for storing gold because of their stable jurisdictions and immediate access to the major trading hubs like the COMEX and the London Bullion Market Association, LBMA. However, this is changing rapidly. Over the past 100 days, the cumulative volume of trading on the Shanghai Gold Exchange and the Shanghai Futures Exchange has surged by 200%, surpassing the COMEX in trading volume. This isn't just a shift in trading activity, it's a shift in global financial power. The flow of gold from west to east is a clear indicator that the balance of economic power is tilting, and with it, the control over the pricing of gold and silver. The implications of this shift are profound. As the East continues to accumulate gold and bring it back home, the West is losing its grip on the global financial system. This isn't just about gold, it's about the entire financial architecture that has been built on the US dollar and US Treasuries. As more countries move away from holding US debt and instead accumulate gold, the demand for the dollar will decline, and with it, its value. The significance of this trend cannot be overstated. For decades, the US dollar has enjoyed its status as the world's primary reserve currency, a position that has allowed the United States to borrow cheaply and finance its deficits with relative ease. However, as countries like China, Russia, and India continue to build their gold reserves, they are effectively signaling a lack of confidence in the dollar's long-term stability. This is not just about hedging against inflation. It's about preparing for a future where the dollar is no longer the undisputed king of global finance. The underestimation of this shift by Western policymakers is alarming. While the media may not be reporting on it, the reality is that the world's central banks, the most well-informed and influential group of traders on the planet, are making their moves, and they are doing it quietly, using the West's own market mechanisms to their advantage. The consequences of this shift will be felt across the globe. As the dollar loses its dominance, the United States will find it increasingly difficult to finance its deficits and maintain its standard of living. Inflation will rise, the value of the dollar will fall, and the purchasing power of American consumers will decline. This is not just a theoretical scenario. It's a real possibility that is becoming more likely with each passing day. For investors, the implications are clear. Gold is not just a safe haven. It's a strategic asset that will play a central role in the future of global finance. The current price of gold is a bargain compared to where it could go in the near future. The central banks know this, and they are positioning themselves accordingly. The question is, will you? Don't let the media's silence fool you. The world is changing, and gold is at the center of that change. Whether it's through the creation of new digital currencies backed by gold, or a revaluation of gold on central bank balance sheets, the role of gold in the global economy is set to increase dramatically. In the end, gold will do what it has always done: preserve wealth and provide a hedge against economic instability. The signs are all around us. The flow of gold from west to east, the repatriation of gold reserves, and the reclassification of gold as a Tier 1 asset all point to one inevitable conclusion: gold is the future. So as we stand on the brink of this new financial era, the choice is yours. Will you be prepared, or will you be caught off guard? The smart money is already making its move. It's time to follow suit. After all, history has shown us that those who hold gold hold the key to wealth preservation.
Stay informed about the latest developments shaping the precious metals market with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today. Link in the description.